Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top stories. EPF's bond holdings to be restructured under domestic debt reforms. Policy rates cut. Sri Lanka considers nuclear energy. In our main story this week, Sri Lanka unveiled its plans to restructure domestic debt. Accordingly, treasury bonds of superannuation funds such as EPF and ETF will be exchanged for treasury bonds with a longer maturity at a coupon rate of 12% till 2025 and 9% till maturity. However, this rescheduling does not impact the individual EPF members as the overall fund has grown in size. Thus, there is sufficient cash flows to repay retirement benefits. To encourage the EPF and other superannuation funds participation, non-participating funds will be subject to income tax rate of 30% versus the current 14%. Treasury bills held by the central bank will be converted into treasury bonds of longer duration at a lower coupon rate. Sri Lanka development bonds were given three options, which are a haircut to principal, issuing 15-year bonds, and conversion to rupee instruments. On Thursday, the Monetary Board of the Central Bank cut policy interest rates by 200 basis points. An adjustment was anticipated due to disinflation since September and a steady decline in credit to the private sector. June inflation fell significantly to 12%, with food inflation coming in at only 4.1%. According to the central bank, inflation is expected to come within the desired lower single-digit level earlier than previously expected. At the last policy rate meeting in June, rates were cut by 250 basis points. According to Minister of Power and Energy Kanchana Wijesekara, Sri Lanka has issued a request for proposal for China's state-run Sinopec and Singapore-based energy firm Vitol to build an export-oriented oil refinery in Hambantota. Considered to be the country's largest refinery, the minimum investment is about $4 billion. The minister also said that Sri Lanka is currently assessing nuclear power plant offers from Russia, United States, India, and European countries. He added that there are a number of proposals on nuclear power available to Sri Lanka. However, the appropriate technology need to be selected. In our weekly tourism update, in June, 100,388 tourists arrived in the country, pushing the year-to-date visitor numbers to over 624,000. This week, strong inflows increased the month's daily arrivals to 3,231. In June, India accounted for 26% of the arrivals, followed by Russia and the United Kingdom. Air China resumed services to Sri Lanka, operating 3 flights a week. Arrivals from China have steadily grown since the relaxation of pandemic restrictions and is now the 5th largest source market. Liro gas reduced the price of a 12.5 kilogram domestic gas cylinder to 2,982 rupees. This is the 4th consecutive price reduction approved by Liro this year. This week, the all-share price index at the Colombo Stock Exchange broke through the 10,000 mark. This was led by the banking sector stocks, which are now considered to be less affected from the domestic debt restructuring process. During the week, foreign purchasers significantly picked up. At the Treasury bill auction held on Wednesday, yields on all maturities fell significantly. The 91-day maturity bill fell the most, 521 basis points. Bids amounting to 252 billion were received, of which 141 billion rupees were accepted. The Sri Lankan rupee was mostly flat against the dollar this week, with the central bank's indicative mid-spot rate ranging between 306 and 308. And with that, we wrap up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.